Good morning. Let's see, it's Tuesday, December 13th, 2022, and it's 8:15 a.m. Pacific Standard Time. So as you can see, the market today had a really good spike up. Okay, so good idea. I want you to just ignore this line and get rid of that. Okay. Basically, we are in a downtrend. Okay, this is a bear market, and each high is lower than the last high. Okay, and it's all I need to pay attention to. Once it starts coming above, then the market could be switching over into a bull market. Just like you see here on a smaller time frame, you got this high, now you got a higher high here, another high here, another high here. So that can be considered a bull market, short term. Long term, still in a bear market. Same thing going down. When it's going down, here's the high, this is a lower high, here's a lower high, here's a lower high. So in a bear market, short term. It's pretty simple, right? So we're just going to focus on this right here, and the market's been going up and up. Now this is only one bar coming up. So this, if this by the end of today, if it doesn't come up higher than this, let's say it comes here and starts going down, then that could be a spike, which I've talked about spikes here, which I love to trade. If that's the case, then I might get in here today. So I'll see how it goes. Now tomorrow we've got the Federal Open Market Committee report that's coming out, and that's going to talk about interest rates, whether they're going to raise it 50 basis points or not. And of course that's going to do something to this market, but the overall picture, see that those news reports don't control the market. They could create spikes, which they did. That was another report that came out here, and some people say, well, that's what drove this market up. Well, not really. I mean, that was a retracement. You can look at it either way, but the point is, if we just look at these spikes, this could be another spike going down. This market's very weak. It's not a strong market. And like I said before, even though a consumer price index report came out talking about inflation being down compared to last month, you got to remember inflation reports are just like this here. Nothing goes straight up and nothing comes straight down. They go like this. So one month the report could be down, the next month it could be up, next month it could be down, because that's how it works. It works exactly like the stock market, charts. It's like this. So this month was better than that last month, but that doesn't mean that inflation's down. It just means that we're dipping, or it could mean that. So you can't always go by these reports. They're not accurate by any means. But people get excited and the market's drawn up, and I'm not even sure if the people how this thing went up, but it did. They said because of the report, and okay, so we'll stick with that for now. And so this report drove the market up, but just for a short period, and then it came back down. Now this market could still come back up. I don't think it's going to go higher, because we've got that report coming out tomorrow, and usually there's no big moves the day before. So anyway, I'm guessing that it's probably going to stick around here, and then that could be the downturn from that point on. And if it is, then I'm going to get in. But again, I go by feeling, see how that goes. Let's see, got the Dow Jones. So there's a Dow. Now you could say, because this was a high here, came down, and now it's above this high. But it never really made it or stayed above this high. So it poked up, came back down, it poked up, came back down. Here's another one. It's got to stay up there. You know, it can't just poke up there. It's got to stay. Now, if this is the new high, let's say, then you got to have another bar, and it's got to go up higher, and another bar go up higher, and you can say, yeah, okay, we're back possibly into a bull market, but actually it's got to go above that. So right now, the way the economy is set up, you know, this market is not strong at all, and I think that this move here is eventually going to come crashing down, just based on my experience and where I believe the economy really is. The economy is not doing well at all. It's very sick. So interesting thing about this is if you look at the Russell, you know, a lot of times you get markets that are leading the way, and the Russell's always been, so far, the Russell started, here's a new high here in a Russell, which was actually before 2022, and it started heading down. The Dow started heading down a couple months after. So that could mean that the Russell is actually an indicator of the future. You know, I've used this before, and it's never really made any big moves, and it continues to break down while the other ones are starting to edge up a little bit. And you can see here it's actually not, you know, it popped up too, but it looks like it's going down. So this could be an indicator of the market's going down before it even does go down. And then you got the NQ that never really made any big moves either. But again, this could be considered a spike. Hopefully it is on the way down, and these are going to break down. And that would be a real good move. So I'm a conservative trader, meaning that I don't really trade a lot in here. I wait for the big moves, the spikes, and then I write it down, and then I can make some really good money just on that one move. And sometimes I only get that twice a month, while other people trade every day, day traders, or sometimes they trade several times a month. And good for them, you know, and they make money doing that. But that's not the way I work, and it's not right or wrong. It's just the way I am. And maybe later on I'll start doing it. I don't know. But for now, mostly for years and years, you know, I've been trading about 24 years now. I've figured out a system that works for me, and it works well. And so this is what I do. So here's an Amazon chart. You know, the Amazon actually stopped here. It had a little spike down, came all the way up here, had a spike up, came back down and hit this line, and had a retracement, which is normal. This is all normal. But now it's back down a little bit. It's going to fill this gap, and eventually it's going to break down into here and possibly go down into the single digits, at least the teens. And so this is breaking down. You can see that. You know, here's some highs. This high's lower. That's high's lower. So there's nothing telling me here that we're back in a bull market. You know, it's just breaking down. But yet people believe it, because when the market was here and it popped up here, everybody thought, hey, this is good. I'm glad I didn't sell. You know, market's back up. And it came back down here. And then when it did this morning, they're probably thinking the same thing. And they're going to be thinking that all the way down. That's the way the markets work, and that's why 90% of people lose. They hang on to their position. So, if you go into Tesla, look at Tesla, made a new low. So these markets are clearly breaking down, but some of them made new highs today, short-term highs. But if you look at these, Tesla's a big company, and you look, it made, now, I'm not trading Amazon or Tesla, not right now, but if you look at, if this one creates another bar going down, then that would be a good short. But again, I'm not really trading this market. I could if I don't see anything in the indexes, because I like to trade ETFs primarily, and once in a while I'll get into the stocks, but make, 95% of my money in the ETFs. Like I said before, there's tons of opportunities, so many opportunities in these markets. Here's the market, it's kind of inching its way up. This is Netflix. And people think, well, because everybody's watching Netflix, and the market should go up. Well, a lot of people are buying Teslas, and Tesla's probably here to stay forever, I would think. And yet it's going down. So you can't go by the strength of a company. Tesla's a lot stronger than Netflix, and it's going down, Netflix is going up. So it all goes by demand. Demand on the stock, not on the company's profits. And I hope people can see that, because a lot of these people are buying because they're thinking these companies are going to be strong in the future because of their stock. Well, a lot of these companies, even if they do fail, the people at the top, they make a lot of money. Lots of money. So Tesla's not worried about that, and plus Elon Musk's been pulling out billions of dollars from his stock because he's doing other projects too. So he's not concerned about any of that, because it doesn't really have control over it. So yeah, that's the way the stock market works. See what Coinbase is doing. It doesn't look too good for coins, the bitcoins and all that. So here's Bitcoin. It's been going down clearly in a bear market, and now it's at the top, and it's hitting this enormous resistance line, and it's at the very top. So this would actually be a good short. Let's see here. It came up, hit here. This would actually be a really, really good short right here, because it came up and it's hitting this massive resistance line right here. And tomorrow we got a report coming out. So I don't know how much this is going to move between now and the end of the year, but I would, if I was trading Bitcoin, I would say this is a really good short. Put some money in and let it ride down. Now, if the market pokes up, comes back down, then that would be even a better short. But if it goes up and then stays back in this area, then I would definitely get out, and I have a small profit or a small loss in here. But if this does go down, see, this is how I trade. I wait till it comes and it hits these big lines of resistance or support. This is a resistance line, and then the market will come down. Again, if I was wrong and the market went up, well, I'd take a small loss. But this I would consider a good trade right here. As opposed to getting in right in the middle of this, market can go up or down. In the way I trade, even if the market went from here to here, you can lose. If I got in here in the market eventually went down, but it went up from here to here, it can be, you know, $100,000 loss right there. Not really a loss because I didn't sell out, but lose a lot of money until it comes back down. So I like to catch it right at its top, especially a spike. And this creates another line here. Then that would clearly mean that this is a good short position going down. Even if it only went from here to here, you can still make, you know, $1,000, $10,000, $100,000 just in this move right here, depending on how many contracts you buy. Anyway, back to the ES. You know, like I said, there's lots of opportunities in this market, whether it goes up or it goes down. So this market clearly came up here and it came back down because this is all news driven. And, you know, if it creates another bar here, then that could be a good short. But again, we got a report coming out tomorrow, so I might want to wait for that and see what's going on. As far as the Santa Claus rally, I don't know when that's going to happen, if it does happen. Usually it does happen in bull markets. Bear markets, not so much. But we're still in a bear market. So even if we didn't have a Santa Claus rally, it'd be okay. Only because this is not a bear market. So it's probably a 50-50 at this point. But we'll see what happens. So in a 4-hour chart, you know, this could be considered a second bar here. And sometimes I do trade that way, depending on the sentiment of the entire market. And then this could be considered a second bar. And then you would get in here. Market went all the way up. And it came here, it stopped and started to come down. That would be a good trade coming down. And sometimes I do trade that way. But for something like this, like I said, if this market continues up and tomorrow opens up and starts coming down a little bit, you know, of course the report is going to come out around 11 o'clock Pacific Standard Time. So, and then it starts moving around big time, and then it starts making this move. And that's when I would get in if it stays below this line and creates another chart. So tomorrow might be a trading day for me. But so far today, it doesn't look like it. You know, I'll have to take a look at it. Again, I would rather wait for that report to come out. Because that could, even though I believe these markets in the longer term are going to go down, if that report takes it up before it goes down, like I said, I can lose, you know, 10, 20, 30,000 before it turns around and goes down. I don't like to do that. I like to be pretty much 90% sure that it's going to go in my direction pretty fast, like at least the same day or the next day. And that's just how I trade. Doesn't mean it's right for everybody. Okay, so that's it for today. Tomorrow's a big day, and I might start trading. I'm kind of a little bit excited about getting into the trade going down because I feel like there's going to be some big moves coming up pretty soon, if not this year, beginning of next year. And I'm pretty excited about that because a lot of money could be made just in a short period of time. Okay, that's it. Stay tuned.